In this challenging environment, we've delivered strong, competitive and profitable growth led by volumes. Our domestic consumer business grew by 20.5%, led by underlying volume growth of about 10.1%. In the aggregate, our growth in our consumer business was ahead of the market. Our home and personal care business delivered strong double-digit growth. Soaps and detergents segment grew by 28%. This was ahead of the market, and across soaps and detergents, all the segments grew in double digits. Personal products grew by 17%, entirely volume led, with the PP growth led by skin care and hair. In skin care, Fair & Lovely, Pond's and Vaseline sustained their strong growth momentum. In hair, Dove doubled the level of volumes in the quarter, while Sunsilk and Clear delivered good double-digit growth. Our foods and beverages business crossed the important milestone of 1,000 crore turnover during this quarter. In beverages, we had coffee delivering strong double-digit growth, and in packaged foods, both Kisan and Quality Walls delivered strong growth. In the case of our Pureit water business, where we had talked about the transformation of the go-to-market model, I'm pleased to say that this has been completed and we recorded strong double-digit growth. In terms of channels, both modern trade and rural channels grew well during the quarter. Innovation, execution, and market development are our key drivers of growth. During this quarter, some of the key innovations included the launch of Lifebuoy Clinicare with 10x better germ protection towards the end of the quarter. In our personal products business, we had a series of innovations, including the launch of Dove hair color range, the relaunches of Fair & Lovely Under Eye, Fair & Lovely Anti-Marks, Vaseline Men's, etc. Many innovations in the quarter. In our foods business, we launched the chicken variant under the Knorr Soupy Noodles platform. And of course, in our ice cream business, with the onset of summer, we had a series of innovations which we brought to market. Advertising and promotion spend was maintained at competitive levels, with the absolute level of A&P increased by 54 crores compared to the previous year March quarter. Overall, media intensity continued to remain at high levels. If I talk about the rest of the P&L, as I mentioned earlier, inflationary pressures were high. However, through a mix of judicious pricing and effective cost management, including buying efficiencies and cost savings, we managed to contain the cost of goods sold increase to just 80 basis points. Our operating profit for the quarter was up 32%, with operating margins being up 170 basis points. Profit after tax and before exceptional items was higher by 29%, while net profit was up 21%. So in summary, as far as March quarter is concerned, our strategy, which is about defending our leadership positions in the core, while at the same time building the markets and segments of the future, is clearly working. We've delivered strong, competitive, volume-led growth with improved profitability. Just a few words on the financial year. Our overall domestic consumer business grew at just under 18%, with underlying volume growth at 9.3%. Clearly, this growth was ahead of the market in all the 4 quarters of the financial year. Brand investments were maintained at competitive levels, and as far as operating profit was concerned, this was up by 25%, with operating margins up 140 basis points. Net profit was up 17%, while profit after tax before exceptional items was up by just over 20%. As we look ahead, like we shared last time, we see a mix of headwinds and tailwinds. The headwinds really remain the same, which is commodity cost inflation, both through the currency aspect as well as commodities. Currency volatility, which has increased in recent times, and competitive intensity, which will continue to remain high. In terms of tailwinds, clearly we are seeing good underlying growth in the FMCG markets, as I said before. So the demand drivers for the FMCG business continue to be good.